Now, you'll remember that high inflation is when your products that you use on a day-to-day, they are up or they become expensive for consumers. I mean, here in South Africa, you of course know that by now that petrol, things like petrol, oil, and other day-to-day products have went up, which the going up of these products that we are using on a day-to-day, it is what is called inflation. Now, as I've said, around March the 24th, the interest rate in South Africa went up by 25 basis points, which then meant that the current interest rate in the country was around 4.25%. Now, when looking or putting this into the stock market perspective, which is what we discuss on this channel, you'll remember that I've already been told you in previous videos saying that interest rates slow down the growth in a country. The more the Federal Reserve increases this interest rate is the more the country experience slow growth in terms of the GDP, which is what is the main thing that, as you and me, people who invest in the stock market, it definitely means that companies won't make as much money as they were probably back in 2021 and 2020, which is the thing that I think you must be aware of, to say that we might see stocks or companies that we invest in here in South Africa not performing the way they should due to this high interest rate or due to the Federal Reserve increasing the interest rates. So as the interest rate is going to continue increasing the rest of the year, this is something that is going to make companies, even those that are listed in the stock exchange or Johannesburg Stock Exchange, to experience slow growth. Because like I always say, when interest rates are too high, consumers become a bit hesitant to go out there and take loans, which definitely hurts sectors like your traditional banks that, of course, they make money by loaning people money out there and other things. So people won't go and take home loans, people won't go and take loans to buy cars because they will definitely be afraid of high interest rates. But of course, before we go any further onto this video, you already know that this is just an entertainment video and you should not take it as a professional financial advice video. Otherwise, if you seek professional financial advice, you already know what to do by now. That is, of course, you need to go and consult the professionals. Now, if you enjoy the content that I'll be giving you about these interest rates that are expected to come or that are expected to continue growing even this year and next year, please do make sure that you hit that like button, comment and subscribe. And once you subscribe, don't forget to hit that notification bell so that at least you get notified by YouTube every time we drop a new content. Now, total consumer debt in South Africa is sitting around 1.97 trillion rands, of which 75% of that is home loans and car loans. So home loans and car loans constitute to around 75% of the total 1.97 trillion rands of total consumer debt. People who have these credit card loans, home loans, car loans, and other sorts of loans are going to experience or are going to definitely get their monthly loan repayments going higher due to these interest rate hikes. Now, May and July of this year, there are some analysts or some people that are expecting that the Federal Reserve is going to definitely increase the interest rate by 50 basis points. So we are going to see a 0.5 or 0.5% both in May and in July, which is something that you must have at the back of your mind. If those of you that follow me on my Facebook, you remember that I did yesterday to say that you really need to make sure that you know what you are getting yourselves into, because as these interest rate hikes come, we are going to definitely see not only it impacting us or impacting the consumers, those in terms of their loan repayments, but it is also going to impact the growth in companies, because the more these interest rate hikes go up, the consumers will not go out there to make loans, like I said, to buy cars, to buy houses, to buy other products, which is something that you must know right now, as this, like I said, will definitely hurt many companies that are listed in the Johannesburg Stock Exchange, which that, my friends, just simply means that we might not see the good growth in most of the companies that are listed in the JSE, which will result probably in the companies not to report as much revenues as they were reporting probably in the previous years, which that we all know what it will lead to. It will lead in these companies' share price not performing the way they should. Some companies we just see share price dropping sharply due to this. So this is something that I just thought I should just, of course, give you a heads up, because some analysts and CEO believes that end of this year we could see the interest rate being around 5.75%, and of course end of 2023 being at 6.5%, which that, my friends, looking at the fact that right now as I'm making this video, interest rate is sitting around 4.25% in South Africa, getting to know that within a period of 2 years will be at 6.5%. This just simply means that you must start thinking about rebalancing or looking at your finances and make sure that as these interest rates go up, you are able to afford the loan that you took, the car loan that you took, the home loan that you took, and other loans that you might have taken when the interest rates were lower. And I think as an investor or retail investor myself, I've accepted and know by now that, of course, during this time or during this period of 2 years, we are going to experience or getting to see slow growth in companies that we invest in. There is going to be slow growth. And one thing, of course, that I need to bring to your attention, this is not only something that is happening in South Africa. This is something that is happening all over the world. And another situation that is making things to be worse, of course, is the Russia-Ukraine war, which, of course, we already know that it is that fight. It is one of the things that is making the fuel price, the oil price, to be really, really high, which is something that as long as it continues happening, or as long as the war carries on, we are going to experience, of course, prices of some products continuing to rise, which it is going to definitely affect companies. But this thing, it is not completely bad, because like I said, they are trying to curb high inflation. They are trying to make sure that these companies readjust their prices and we get the products and services that we need at a normal good prices. Otherwise, with all that, guys, I just thought I should just do this video trying to give you an update about what is to come and how will this affect you as a consumer, and how will this also affect you as you are investing in the stock market, as you know that this channel is about the stock market. Otherwise, with all that, guys, some of the things or some of the news that I'll be closely monitoring, you will know that on Wednesday the US will be releasing the consumer price index. And like I said in the video I posted yesterday on Facebook or Instagram, I'm really hoping that the CPI can, of course, be lower than what's expected, which is what is going to result in the companies in the US probably to recover in terms of the share price. Otherwise, that's all from me, and I wish you nothing but the best in the stock market investing journey, and God bless you all.